Good morning, everyone. Good to be back. Boy, you guys got up to some mischief, didn't you, while I was away? Holy cow, look at this market. Raj, what's up, brother? Hi, Moran, Nate, class, Sperry, how you guys doing? Whew. Yeah, Spain was, I went, I went Sunday, Monday, Tuesday, I was back Wednesday. And it's funny, like, I grew up in Saskatchewan, so when you go to places like, Alicante or San Sebastian or Barcelona or like any place like that, you're like, oh my God, this is how the other half lives. It's amazing. Hello, Lonigan. Tudo tranquilo. Hey, Ian, how are you doing? Well, you guys got up to some serious mischief, and I'm telling you, these markets are something else. This is something I've been talking about for a while, and I'm just looking at the week. I'm starting out on the weekly chart because I kind of have to reorientate myself. I haven't traded since last week, so and then everything changed, right? We have gaps, all-time highs. So this is the one thing that I always warn traders about. There is a video that I've done, and I'm going to post it in the room again. Um, we really need to go and look. Why do you every time I sign into Dropbox, they ask for a verification code. These guys are crazy. Hang on. So these markets have limited supply, right? And limited supply means that the positions of the stock that people own, you know, is locked up because they're investments, right? So BlackRock, Vanguard, all the big kahunas, they go buy 1 billion shares of Apple. They put it away for 4 decades. So you can almost imagine that stock sitting in a storeroom, in a vault. It's got about 6 inches of dust on it because they're never selling it. I mean, unless Apple says, okay, we're going to make chocolate Easter bunnies instead of iPhones. That's a material change in business, and of course they'll dump the stock. So the thing is, they take a lot of stock out of the float. Now, in the old days, they used to call the float the floating supply, which basically means the amount of stock that's available to trade in what we call DTC. That is restricted, and then you'll see that there's a very small amount of that stock that actually trades on a daily basis. So Apple's got what, 15 billion shares in the floating supply? But out of that, maybe only, whoosh, 30 or 40 million, maybe 100 million shares at most will trade a day. So it's less than 1%, right? So, and I'm getting to the point here. I know you're probably asking, where is he going with this? The problem with shorting these markets is that you're shorting a market that has very limited supply, and you need supply to short. That's why shorting penny stocks and those scammy stocks are better, because the insiders are dumping stock. Here, the insiders are not dumping stock. Here, the insiders are investors, right? See, in the under 10, under $20 category, these companies have to sell stock to keep the lights on. But Apple doesn't have to sell stock to keep the lights on. In fact, they buy back stock, so they take stock out of the supply. And, you know, it's very, very interesting. People have never, ever done any kind of analysis on this. In the last 20 years, with low interest rates, larger and larger and larger funds, there's really less reason to sell stock. You just keep marking up positions. They just keep marking up their stock, marking up their positions, and everybody's happy to get more fees, bonus time. Everything's great, right? Until you get sort of a cataclysmic event. We haven't had one of those for a while. And everybody keeps fear mongering, but what I'm getting to is when a market goes sideways like this and it fails to liquidate, all you got to do is just breathe on it and it pops. And folks, we've seen this so many times since COVID. You get a liquidation, right? It goes sideways, you get a liquidation, and bang. Goes sideways, you get a liquidation, and bang. Here we didn't even get a decent liquidation, right? We didn't even get a decent liquidation. So, and why am I talking about shorting? Because I know a ton of you guys are short or were short and got, had to go buy back your positions. And I understand. You think it's too high, but always wait for a seller. So what we try and do is on a 1 minute chart, the business is the same, it's just in a smaller time frame, right? You've seen the media talking about Japan planning to sell off its bonds. If that happens, would we see a type of correction in the market globally? We might, but I doubt, Nate, that it would be long lasting. Okay, unless there is a material change in US markets, interest rates, a change in business. Like, say Microsoft one day, Nate, goes, you know what, guys? We're not going to make software anymore. We're going to make marshmallows. Okay? Say they say, okay, we're going to make marshmallows. We're not making software. That's a material change. That would cause a sell off. But the people who own these companies, they have no intention of selling them unless there is a material change. And you can see Microsoft, massive gap, right? These stocks are institutionally owned by companies that have trillions of dollars. And here's the thing. These companies who have trillions of dollars, they can outlast any intermittent shock, right? So there's a ton of news saying that the market's going to go down, blah, 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 blah. What I would do if I were you, Nate, is I would really put all my faith in the chart. Because the chart's telling you exactly what kind of business is going on, right? And you'll save yourself a lot of time, a lot of money. And the other thing is, you'll save yourself a lot of stress. This business is very stressful. I've lost 14 friends from stress in this business. And if you keep it simple, right? What I want to do is I want to keep you guys from losing your hair, from getting ulcers, having heart attacks, you know. It's Let's keep it simple, make you some money, and whatever happens. I've never understood how the Japanese market works. I had one of my clients who did the very first takeover of a Japanese corporation by a foreign entity, and he invented the Japanese warrant market in the 80s. And he was one of the richest men in the UK, but even he blew himself up. He turned $16 billion into like a couple of hundred million, right? It's very, I would just stay out of it, right? It's hard enough just trading the chart, right? Welcome folks on YouTube. Jay Reardon, Sergio, thank you. I was in Alicante for a few days. Uh, it's really cheap to go from Liverpool. Like you go there and back for like $120 return. It's amazing. You know, beautiful place. Go see how the half lives. So what are we going to do tonight? Okay, so fair warning, I've been away for a few days. So there's the daily. And on the daily, we kind of did a look above and fail of 78.08, but it's really bid. If you look at this level here, check this out. That's 70, just under 7,700. You're gonna find bids there when we crawl down. Yeah, John, I was in Alicante. Just that 76, 98, 7,700 level. When we get down there, expect to find some bids. I don't know how long it'll be. Right now, what's going to happen is the market's going to go sideways. It's probably going to go sideways between 77.20 and 78.08, and we're going to distribute this cheap position, right? Yeah, I've been kind of looking at the chart. It is tradable. It's not really stuck, you know. Um, there are some decent trades. The JLo trade was nice tonight. Let's go take a look. So I've got to redo some of these levels over 77.52. And what I'm looking for is if we're going to do a look below and fail. If you look at the profile from a couple of days ago, right, you'll see there are a number of what we call single prints in this profile. So those are all short positions. We filled one of them yesterday, and that's where we found the bid tonight. But as we get down lower, this this day was very traders would call this overextended. First you got a gap and then total extension, right? So look at the comments. Jay Reardon, what are you, an immigration officer? Too funny. What are you, a cop? Hey, Blackhawk, good to be back. So we got a little bit of a compressed profile tonight. It's tight. Overnight inventory is long. It's corrected a little bit, right? That J-Lo correction down here took us down here. Found the bid at 55. In the room just now before I went on, I said, if K doesn't take the J-Lo, we're going to get rotation back up. London's going to open in a couple of minutes. London usually goes down, but we've already corrected inventory. Now look at these candles on the 1 minute chart, right? You could see how mechanical it is, right? Why do you want to know, Jay Reardon? Why don't you focus on the chart, brother? Okay? Okay? Let's make you some money today, okay? Instead of wondering whether about my thing here, let's make you some money, okay? Buying retention is a real thing, you know? Thank you, Blackhawk. Right? Let's make you guys some money. So, inventory has corrected. When London opens, if we get over VWAP, one thing that you know for sure is there's a seller up here, and they're going to be sellers here. So go do your buying retention is something. It's what I call the dirty little secret of the market. You will not find that on CNBC. You'll never find it on Bloomberg. They'll never talk about it. Buying retention is when you have a sell off, what is the percentage of people that are actually going to hold a position versus dumping? In our equity market, the buying retention is very, very high because the people who own stocks are owning them for 20, 30, 40, 50 years, and they've got trillions of dollars, right? So they don't have to sell stock to keep their lights on. They don't have to sell stock to meet margin calls. Here comes London. If London can't get underneath the close, we'll be looking for a little move up. I don't even have my software open for trading. Let's go open it up. So there's the London correction. Now you know there's a seller here. Okay. You know there's a seller here. If you're doing the look below and fail of 77.59, you want to wait until it clears that seller. Where's the next seller going to be? The next seller is going to be up here. And then here. And then here. So this way you have some sort of tactical awareness of where you're going to be putting your sell orders. Make sense? So say you're going long here, right? Say you're buying 77.59.60. I wouldn't just yet because it's offered under 59.5. I would wait until we start offering above VWAP, right? It's very easy to get biased, right? I when I started trading, and I still have this problem, I have a huge problem with bias because I've always been a seller. So as a seller, you always expect others to sell. Not in this market. This market, the selling does not last for long. It's short, quick, done, quick liquidation, then right back up. A very, very difficult market to short. If you are short, say you're shorting, right? Your targets to the downside, if you're doing a look above and fail short of 60, your stop is going to be just here, just right where that seller is, right? So you've identified, okay, there's a seller, and I'm going to sell. But if the offer starts creeping back up, then it's warning you that there are bids. It's going to be a little choppy tonight because we are inside yesterday's range. And let's face it, who wants to put on size at all-time highs, right? Everyone's waiting for that big liquidation down. Everyone's looking for the big liquidation. So what I'm curious is if we're going to open RTH, are we going to open outside the previous day's range or inside? Because if we open outside, then we'll have more likely a scenario to get some liquidation down, right? So far, as London opens, you can see that there's a bid at 58, right? As a trader, your concern is where are they selling and where do they stop selling? You don't need to worry about the buying. The sellers will tell you where the buyers are. How do I know this? Because I've been a seller for my whole life, right? So I'm a seller. Ian's a seller. Trademaker, Raj, George, they're all sellers, right? And we're all competing. So if the customers start leaving the store, that's order flow, we'll start reducing price. If customers start coming in, we'll start raising price. It's really, really simple. The sellers will tell you where the buying is. You don't have to worry about it. Right now, you can see that they stopped selling here, just at 58, and there's competition at 59. So would you trade this right now? No, because it's choppy, right? So right away, opportunity is small versus risk, okay? So the biggest mistake that people make when they're retail trading is they don't know when to take a trade and when to sit the heck out of this thing, right? We try and teach you, and you can't use the word situational awareness anymore ever since that kid blew up his fund. But hey, let's face it. What the heck were you doing when you were 24? You know, everybody's beating up on this poor kid. Ken Griffin taught him a lesson, and that's how markets work, right? But hey, at 24 years old to be managing that kind of money, that's pretty good, He'll be back. I know at 24, I was not managing money, right? Yeah, he's a smart kid. He'll be back. Don't count him out. All he needs is what he needed was an old guy to sit next to him and help him manage risk, right? That's all he needed, right? It's a lesson he'll never forget. Yeah, but at 24, right? Yeah, he'll start again. There's a lot of money out there. Yeah, usually those kind of things happen, Ian, right when you're not focusing on them, right? So let me see what we got. Here we go. Let's grab a couple of micros at 61 and a quarter. Offer them out at 62 and a half and 63 and a half quarters. Sorry. Let's see if I can get taken at 62 and a half. Sold one 62 and a half. And I'm going to scratch the other one. So first trade, just one micro, actually two. There's the next seller. A little jumpy. Not the market, me. All right. Let's move that up. So let's see who comes into the store now, right? It's not a lot of room, Ian. And I have messed up that trade hundreds of times. Okay, so don't feel bad. There is a subtlety to that trade. The reason the subtlety exists is because of our old friend VWAP. If VWAP wasn't here, the order flow would be much more clear and you'd get a quicker move up. But you do have people selling at VWAP who are long here. I bought there because the seller lifted, Sergio. See that there were sellers here? As soon as the seller lifted price, I grabbed one and sold it quick. Grabbed two, really. Right? So that's why I said wait till we offer up over VWAP, over where the sellers were. But you know that there's going to be sellers here and here, right? So what I'd do if I were you, Sergio, is if you have chart replay on your software, it is the most wonderful thing where you can go back, and this is what you should do in your downtime. Go to, on Sierra charts, there's a little chart replay panel, and you can go and replay your chart, and you can watch that move over and over and over again. I'm just going to do it right now to show you guys. And you can speed it up. You can go 10 times speed. You can slow it down. So when you watch the replay and you see it come up over that, see, there you go. See, look, there's a signal that there's a seller there, right? And then it comes back down. I used to do this every night after the close. I'd go back and I'd look at situations primarily where I'd screw up trades or I miss trades, and I'd replay the chart to really, really dig into what happened there. And if you can focus on that, right? If you can focus on that, it's really going to help you. Focus on the 1 minute chart. There you go. Now we can rewind it, right? Slow it down. And you'll see the move again. You see what I'm doing, Sergio? This is like a football player reviewing game film, right? Right? Do this. This is the boring stuff that really helps. That's where you're buying. You're putting your stop just under VWAP. Sell a little, sell a little. If you know where the sellers are going to be, that's where you put your orders. So as soon as you're long, you put your sell orders up. See? Chart replay, it's one of the most cool things about modern trading is you can actually go and replay the chart over and over and over again. Exactly, Moran. It's one of the most helpful things I've seen. So we're just in this cost basis zone here. Let's see what happens next. It's a good idea, John. We'll do that. That's a good idea. We got a seller just under 63 and 3/4. Let's see if we can take that out. I like Sierra Chart. I I've been using Sierra Chart since 2012. It's a pain in the butt to learn. It's going to take you about 3-4 days of a long weekend to do it, but I think it's worth it. Um, right? I mean, there's lots of other stuff you can use. You don't have to use Sierra. I've just used Sierra. I have TradingView, um, just like for Bitcoin and stuff like that, but I've never used the chart replay on it. There's 83. If you're still long, there's going to be a seller somewhere here, 64 and a half, 65. So all our trades are based on two concepts. And the concepts are there's too much supply or there's not enough. So we ran out of supply under 77.60. The market rotated up to 63, 64, right, to find sellers. That's that's really all that's going on. And the sellers are trying to tell you, hey, look, there are buyers coming in, right? Hey, there you are, Jerry Reardon. Okay, you're having trouble drawing the cost basis? It's just a matter of practice, my friend, right? If you want, Steve's running a special on the room. I have a ton of videos on how to do it. They're also on YouTube. If you look at the video from, was it Friday? Thursday or Friday's video, I do it. It's just a matter of practice. That's all it is. There's nothing really, there's nothing, there's no big mystery to it. It's just practice. What you do is you go and draw balance areas, right? So I do balance areas. When I started, I did balance on every time frame, right? Do it on every time frame, do it on every instrument, right? And you just keep practicing over and over and over and over again, right? That's all it is. And you'll notice over time, as soon as you see a chart, when you see that back and forth, that is a cost basis. This is a distribution cost basis. This is discount. That sale brings in buyers and we distribute again, right? So you have to think about it like a market, right? Where do you buy your stuff, right? There's a cost basis, distribution, discount, back to cost basis. Just keep drawing these levels. Keep doing it. Don't give up on it. And you will find eventually it'll work. If you need any help, reach out to me. I am around. Oh, that's the wrong chart. Hang on. Yeah, it's a little tight, Raj. I mean, here's the thing, right? We have this big, I call this like the Olympic torch profile, right? And it's like a sky hook, right? You throw it up here and it's just going to be kind of slow and sideways until we trap enough people long here that we get a liquidation. And sellers are forced to lower price, right? And you're not a pest, Reardon. You can ask all the questions you want about trading. I do not mind. Now, if we take out that 77.66, right, there's a whole bunch of stops here. H, I, J. So anyone who's short, they'll be using those as a stop. If we blow that, then you'll be looking for the 68 and then the overnight high. Like I said, this market is a real pain. Yeah, there's a ton. Yes, there are about, I think, 400 videos, and uh, I do execution classes every Wednesday for people in the room. Give it a shot for a month, right? You can try it for a month. If you don't like it, you know, you can cancel. Here's the thing though. I promise you in a month you will learn more and be more profitable in a month than you will anywhere else. Because we actually teach you information that's useful. There's a lot of trading rooms, and I don't mean to be rude, but they really don't know what they're doing. You know, they have no clue. They've never traded size. Next time you ask, somebody's trying to tell you how to trade, ask them if they've ever traded out a million shares a day, or if they've ever had to trade out a million shares a day on 15 to 20 different stocks for 15 to 20 different clients, right? I mean, that's what I did. I was the seller. I was the executioner. So I was the guy who sold for the smart money, right? That's good. We'll do another one, Nate. I think I picked up a cold on the plane. There was like a bunch of little kids on the plane. I've got the sniffles this morning. Jeez. It's too funny. My goal is to make trading accessible to regular people. I hate this. I hate the fact that they've overcomplicated this so much that there's just no way people can be profitable. It's horrible. There's no reason to do it. And that's just to keep people confused so they keep spending money, right? I want to make it that you guys don't need me, right? So you know what you're doing. You can trade on your own, you know? Free range traders, right? I don't know the percentage of. You should actually ask our AI what is the percentage of moves up at the end of the month. But here's the reason why prices go up at month end. Say you are managing money, right? You got a small fund, couple of $100 million, right? Well, people look at their statements at the end of the month, and if you haven't made the money, they pull their money out, right? So the entire industry, right, is built on the fact on a performance scale, right? Like when traders start at a firm, like these big firms, what is their base salary? 300 grand, 600 grand now. Nobody works for that. They work for the bonus. So your bonus is based on profits. So the whole industry is geared to mark up stuff at the end of the day, the end of the week, the end of the month. Happy clients wire more money in. Unhappy clients wire money out. The entire industry, ever since inception of the industry, is based on the fact that, hey, you give me 100 grand in 3 years, I'm going to give you $1 million. Now, do you understand? The whole market is created for capital inflow and performance, right? These guys right now, right? It's August, right? So the traders now they're looking at this quarter and the next quarter, and bonus time is in January. That's why you'll see a lot of times in December markets get moved higher. So and then they'll sell off in the new year. Yeah. And we're just kind of bopping around here. This market is so mechanical. Look at this. If you go and you can see that they stop selling right here. There's the bid, there's the offer. So it's just going to bounce around here until we get more order flow. Now, if they have to put it on sale, right, they'll take this. If you can't get any buyers up here, then they're going to put it on sale and they'll come right back to here. These 1-minute candles charts are amazing, the amount of information they'll give you. They'll tell you where they stop selling and where they start. Do you think after buying retention midweek, short covering starts to unwind? I don't know, Blackhawk. Here's the thing. We're in uncharted territory up here. So I don't like to be a prediction guy because I'm never right. I like the market to tell me what's going to happen. It's very hard for longer term positioning in this ES. But I think until we break 77.20 and 76.32, I just see sideways, right? Because this is where your inventory is. This is your distribution, right? So we can just go like this and sell it back and forth like this, right? Until that short bid gets filled and then we'll drop back down. I don't know when that will be. The way it's acting tonight, I don't see any desperate sellers, right? I see no desperation with the sellers. They have no desire not desire. What should I say? They have no reason to lower price. No reason to lower price at all because the buyers are there, right? See, now we're having a bit of a sale, right? On a shorter time frame, yeah, they'll lower price. So here, what I'd be looking for is a look below and fail of 77.59. Yeah, there's no backfill on that move at all, Raj. Like that move caught everybody by surprise, right? And the reason is because once we got over the cost basis, once we took out that high, and especially once we got over 76.32, there's nobody who owns ES up here to sell into it. So there's no overhangs. They can take this thing wherever they want. If the buying is there, if the order flow is there. It's one thing I learned making markets in stock. Once you flush out the sellers, man, you can. I mean, I took a stock. We started at $3, and I took that stock to $300 a share. And the stock, all of the stock was owned by a hedge fund in France, right? And my client had sold them all the stock. So they owned every single share. I could move that stock $20 a share by spending $500. And the company made glue for broken bones out of sea coral. If you can believe that, right? It's all about supply. If the supply is restricted, you can you can move a stock anywhere, right? You can move it up, you can move it down. It's like it's on a yo-yo. Look at that bid off of the 60s. Man, this thing is impossible to short right now, right? Another company, we didn't have a negative day in 2 years. We got written up in Bloomberg, and the client Took the stock from $2 to $8 over a 2-year period, every day just inching it up. Maybe 50, 75,000 shares a day. Nothing. Just crept it up higher and higher and higher and higher. The company put out one news release a year. That was it. You know, it's amazing how these markets have hidden the truth from retail investors and retail traders. If you want to learn how to do this in a simple way, we'll teach you, right? When to take the trade, when not to take the trade, where to put your risk. That's the most important thing. And you'll see really cool stuff like this. See how they sold here? They will sell there again. Size traders always sell at the same places because they have to distribute product, right? So the 1-minute chart is much more effective than any delta, footprint, nose print, any of that stuff, right? Nice work, Nate. Nice, nice, nice. Beautiful, right? Do a couple of those trades, then just protect the money you made, right? Alrighty. Any questions? Thanks for being with us, folks. Come visit us at tradingsyndicate.org. I'm vwaptrader1 on X, and we'd love to help get you profitable. It's okay, Sergio. You just got to get used to looking at it. That's all it is, brother. It's just you got to get used to looking at it. And once you start getting used to it, that's all it is. It's just time. This is not rocket science, right? Some of the best traders I know are functionally illiterate. It's just understanding a little bit about how the business works and repetition. So the holy grail in trading is discipline and repetition. Discipline, repetition, and knowing when to do business. And we'll teach you that. Come check us out. We'd love to talk to you. And if you do join, DM me in the room. I'll hop on the phone with you if you need help, right? And we'll see you at, was it 2 o'clock, 2:15 for the next session. Thanks, everyone. Have a great morning. Bye for now.